Hi. What if I tell you that in India you can actually export goods or you can even export services without even collecting GST on it? In addition to not collecting GST, you can also get a refund of the unutilized ITC balance which is available in your electronic credit ledger in cash directly in your bank account. Now, before going ahead with the entire process, let us primarily understand what is the meaning of export of services and what is the definition of export of goods, because these are the primary first step. Because for going forward, going further with the benefit of not collecting GST and the benefit of getting refund, the primary component is that your transaction should qualify as export of service or it should qualify as an export of goods. Now, Now let us primarily understand what is the definition of export. Firstly, export of goods and export of services. Very simple case. If you want to qualify under the benefit of export of goods, then you just have to satisfy one condition. Just one condition. That is that goods should be moved out of India. Goods should be moved out of India. And in case of export of services, there are total 5 conditions that you have to satisfy. 1, 2, 3, 4, and 5th. First one being location of recipient. Let's take location of customer. Location of customer should be outside India. Location of supplier should be within India, and place of supply should be outside India, and the consideration, that is the billing amount which you receive in your bank account, should be in dollar, it should be in euro, or it should be in yen, or it should be in pound. Now, in a simple nutshell, the amount you should receive, you should compulsory receive in foreign currency. And the fifth part is very crucial. It should not be between and it should not be between it should transaction should not be between mere own establishment. So we know that in order to go ahead with go ahead with the refund, or go ahead with the benefit of not collecting GST on the transaction, you have to qualify export either as an export of good or export of services. Now, in both the cases, there are conditions. In case of export of good, we just understood that this is one condition: good should be moved out of India. Done. And in case of export services, there are total 5 conditions. Each of the conditions are very crucial. The first 3 conditions are kind of straightforward. Like, location of the customer should be outside India, location of the supply should be within India, and the place of supply should be outside India, and the consideration should be received in foreign currency. And the fifth is kind of a crucial condition, that the transaction should not be between not should not be between own establishment. We'll come to each point in detail probably in the upcoming video. For now, we should just develop one understanding. It is that if you want to qualify export of service or export of good, you just have to satisfy with these conditions. In case of export of good, just one condition. In case of export of services, you have to qualify 5 conditions. Now, we'll just have an understanding. We'll just go to the portal and we'll understand what is the exact wording given in the provisions. So I believe that probably my screen is visible. So we have to come to GST and we have to come to IGST Act, come to section 2, that is definitions. And in definition, with respect to export of goods, it is given under section 2 subsection 5 of IGST Act. If we just have a plain reading, you will understand that export of goods means that taking goods out of India to a place outside India. And in case of export of services, it means that any services having satisfying these 5 sub-conditions. First condition being supplier of service is located in India, recipient located outside India, place of supply outside India, and the payment received is in convertible foreign exchange, and export service is not between mere own establishment. Now, each of the condition had to be read in very depth. For example, there are with respect to this point, there should be a separate discussion on this, and with respect to this point, there should be the separate discussion, and this place of supply, multiple provisions are there with respect to section 13, and also in cases where recipient location, supplier location, and what exactly are there any other condition other than taking goods outside India. Now, with respect to these, there are actually more conditions, but prima facie these are the prominent condition. There is also condition like within what time period the amount should be realized, and there is rule 96A, and there are multiple other section, multiple circulars, multiple notifications. Probably will cover one thing at a time. And now prima facie you should understand just one thing. In case of export of goods, one condition, take the goods outside India. In case of export of services, five conditions would be satisfied. First one, location of recipient outside India, location of supplier within India, location place of supply should be outside India, and the consideration which you receive should be in convertible foreign exchange. And also, yes, in Indian rupees, will come to that. Prima facie understand that your consideration should be received in convertible foreign exchange, that is dollars, pound, yen, euros. And last one, very important, we'll have a separate discussion on this. Last condition is that the transaction should not be between own mere establishment. So I think probably these are the five one plus five condition for export of goods and for export of services. So yes, so considering this, so if every condition has been satisfied, we just develop an understanding of what is actually export of goods, what is actually export of services. We read the provisions, and yes, probably that's it for this video, and we'll see towards in the next video. So thank you.